Okay, hope everyone had a great weekend. Just want to do a quick mic check. If you guys can hear and see the screen, can someone put a 111 in the chat? I just want to make sure that my mic is working before we start talking. If you guys can hear and see the screen. All right, looks like one person can hear. All right, you guys can hear and see the screen. Let me put a 111 in the chat. Okay, good. Mic is working. All right, good, good, good. All right, if it's your first time on this call, how this call goes, I'm going to talk to you guys about the Slingshot strategy. We're going to talk a lot about liquidity. I'm going to show you guys examples of the strategy, how we use the system to confirm analysis. We'll talk a lot about entries, where stop loss should go. We'll talk about the open orders analysis and how I use that form of analysis to get an idea of where my directional bias is going to be. And then I'll open it up for some questions later on in the training, make sure everybody's on the same page. But want to just kind of dive right into this and give you guys a good understanding of at least how I see the market and how understanding liquidity will definitely help your trading. So if you're new to this call, this should be kind of an aha moment for you, maybe the missing link to, what you already know, or this will just be a review for the people who have been on the call, for the last 2 or 3 weeks and, are pretty hip to, you know, the strategy and are doing well. All right. But first things first, let's go to the chart that has the my little graph because I want to talk more about just how the market works and, explain to you why the market moves the way it does. All right, so we're going to take it to this screen here. And what I'm pretty sure a lot of you, know about the market is, we do know that in a downtrend, the market makes lower lows and lower highs. I know, in an uptrend, the market makes higher highs and higher lows. That's pretty standard. A lot of people, you learn that first. The other thing you usually learn is you learn support and resistance. And you're usually taught to trade off of support and resistance. You know, pretty standard for new traders of the market. But what they don't explain to you on top of learning that is why the market moves the way it does and what each phase actually means. So in um, the market is basically made up of the banks taking and creating liquidity. If you don't understand what liquidity is where pools of money are sitting for the banks to take. Now, those pools of money come from us retail traders. Obviously, when we place a trade, we protect our money by putting a stop loss above or below our entry. And that's a pool of money that, the algorithm will actually seek out to actually continue price in a trending motion. That's the reason why the market, does have these pullbacks. And it's a lot of the times those pullbacks are coming from people who are maybe on lower time frames and they're trading off of those, support areas or trading off of those resistance areas that they were taught to trade off of because, they're new traders and, they may not understand, trends or they may not understand what they see on higher time frames versus the lower. So when a retail trader comes into the market and the market is trending down and they see that there's an area of support here, that retail trader will buy in this air off this support. And if they don't understand that the overall move or the overall market is a downtrend, they basically are trading a pullback. And what happens is the banks know that these retail traders are buying. And what happens is below this low where they're putting their stop loss, and anybody who actually decided to chase this market and buy in this uptrend of this pullback will get stopped out because the banks know the market is trending down. They will enter high. And then when the market actually starts to push down, everybody who bought in this little pullback, which looks like an uptrend on a lower time frame, like a 1 minute or 5 minute, are going to get stopped out if their take profit is up here somewhere and they're protecting their money down here or below their entries. So what I mean by the market taking and creating liquidity is just this. When the market is in a downtrend and we break below a low, I'm pretty sure you've heard the term, break of structure, right? So when the market breaks below this peak, right? That is the bank taking liquidity. Now, when the market runs back into that area of support and the market pulls back, this is the market creating liquidity. So it's basically just this. The market is going to take liquidity, create it, and then they're going to enter high and take what they just created. So if we can understand that the market is in the downtrend and what phase the market is in, then we can sit there and wait for the process of the creating of the liquidity to occur so we can strike when the banks are going to come into the market to take out the liquidity they just created. All right. Now it's the same thing for an uptrend, right? The market makes higher highs and higher lows. Retail traders will sell off of minor areas of resistance, maybe that they spotted on lower time frames, maybe not being aware that we're in an uptrend. And when they sell, the same scenario, the market will pull back, usually in a lower low, lower high formation, right? A little baby downtrend. And there'll be liquidity in this entire move, stop losses. All right. So just the opposite of this, the banks will enter low and then they'll push price up because their goal is to sweep the money from all the retail traders who sold against this trend. So if the market is trending to the upside and the banks know that there's money above these peaks, then you'll see that your entry and your risk to reward will be 10 times better if you're entering at the beginning of the process of them taking the liquidity versus entering where the banks have already taken the money, leaving your risk to reward being from, maybe this area here to that area here, where literally you could enter here and your stop loss can go literally literally a few pips below the low, and you have a better risk reward on that trade. All right, and I'll show you what I mean by that in some of the examples when we get to the live chart. But that is the main thing that you have to understand about the market, and this process happens on every time frame, which means the big swings that you see in the market, right, on maybe higher time frames, it's the same thing. The bank is creating liquidity, taking liquidity, and then intricately in these uptrends and in these downtrends on lower time frames, the same process is happening. And I'll show you examples of that as well. All right. Now, when you're looking at the market and you're kind of marking it up, right? What you'll be looking for is you're going to be looking for what phase the market is in, right? Before you enter a trade or think about an idea of entering a trade. So if you come to the chart and you see that the market is maybe in this area where the market is actually getting ready to push to the downside, then the market is in what I call a push phase, which means it's already pushing it's already in the process of taking liquidity. So if that's the case, then you can pretty much just wait or see if you identify what we call a break of structure. And how I identify that is the moment we break below this low and stop out these buyers, there's your break of structure. So from here, you're pretty much sitting on your hands because you know the market is in the phase of creating liquidity. All right. So this is where you would write BOS. Right. Now, when you get that break of structure, right, that gives you the opportunity to identify buyers and sellers in the market. And if you have buyers and sellers in the market, right, and the market is trending, then you can get an idea or you can gauge when the bank decides to create liquidity, how far it should pull back. There's usually going to be an area of inefficiency here, or possibly an order block that the market will pull back to, or an area of resistance that you can visually spot. Now, once the market pulls back and the bank creates liquidity, I like to put what I call RTD down here. And the reason why I put RTD is because I call it a reason to drop, a reason for the market to drop. So that's what RTD means. So once I mark the chart up like this is the pattern that I'll draw on my chart, which you probably saw today, right? To identify the order that I'm going to trade towards. So when I place the trade, I'm placing the trade with some confluence. And when you do this, even if you place the trade like this and say you lost this trade, this process wins more than it loses. So as long as you follow this type of pattern and you understand what you're trading and why your entry was here, you're going to win this trade more than you'll lose. And I'll show you on the live chart what I mean by that. All right. So once you see this setup, your entry is going to be in this vicinity above your RTD. Aggressively, your stop loss can go a few pips above this high, right? Or conservatively above the obvious previous high, right? And then you're in your trade, right? Same thing for the uptrend. You're going to have a high and a low. You're going to identify a break of structure, right? And then you're going to identify the buyers and the sellers. Obviously, in an uptrend, the buyers are taking out sellers. So we're going to be looking for the bank to do what? Trick sellers into selling off of this area of resistance back into an area of support, right? And then now you'll have what I call an RTP to trade towards. An RTP means reason to push. So it's a reason for the market to push past its high, right? Your entries will be down in this area. Stop loss would go a few pips below this low aggressively or below this low conservatively with maybe a smaller lot size until price actually starts to take off and maybe you add a position. But this pattern, you're going to see it on your chart over and over again, guys. You're going to see it on the higher time frames. You're going to see it on the lower. You're going to see it at your entry point, at your entry point on a 1 minute or 5 minute time frame. The same exact pattern. All right. Now, what a lot of people don't realize about the market too is when the market pulls back, how much liquidity is in that pullback that's going to fuel the market to the downside or to the upside. All right. You're going to notice on your chart that, the market doesn't look like these straight lines. The market is going to be pretty manipulated, right? You're going to see the market in a downtrend, but you're also going to see these pullbacks where the market is pulling back in a higher high, higher low formation or a lower low, lower low, or a lower low, lower high formation. Now, if you're seeing this on a 4 hour or 1 hour time frame, and then you drop down to the 5 minute or the 1 minute, this pullback will look this big. So you forget that you're in a downtrend and you'll think you're trading to the upside, trying to hit TPs up here. So you have to really know the difference between the higher time frame and the lower, right? And I'll show you examples of that as well. Now, in a downtrend, right? When the market pulls back in this higher high, high low formation, these are buyers that are buying against this downtrend. So every time the market pulls back in the pullback, there's another buyer, another buyer, another buyer. So each one of these peaks contains a stop loss. The more you see, the more liquidity is being created. It's not just this low here. It's this entire move. Okay. Now, once the bank enters, they're not only their goal is not only to get to this point, their goal is to take out everything that it just created in this pullback. And you'll see this on your chart as well. Same thing for the uptrend, right? The market will make a low and then a higher high, and then it'll pull back the same way in a lower low, lower high formation, right? With tons of sellers selling in this pullback, right? Against the trend, leaving stop losses up here for the banks to take out, right? And you'll see that it's manipulated. Before price gets to this high, you'll see it take out a few, maybe pull back again, take out another few, pull back hard, and then come up. All the banks do is they constantly take and create, take and create. Your goal is to just figure out what phase it is. So when you enter, you're entering when it's taking what they just created. All right. So I hope that this resonates. If this is new to you, then it's going to take a while for you to see the market this way, but it's not just trend lines and head and shoulders patterns and M patterns. It's a language. And when you understand that language and how to time that, with your session, then things will be a lot clearer. All right. So let's look at this on a live chart. We'll look at I guess we'll look at US 30. Right. And I'm going to go to the naked chart because I'm not really focused on the actual system and arrows. I want you guys to look at this on a live naked chart first. All right. So here is daily time frame. Right. And this is what I mean by not only are you going to be trading these patterns intricately in these moves, but look at the swings. Right. You see how we have this swing. And then we have this swing, right? Right. And you see we had this series of consolidation, right? So, and we have a low. So look at how the market works, all right? We had a swing here, right? So if you look at this, this is a low, lower high, lower low, lower high, lower low, right? So notice once the market broke below this low, right, of this swing, look at what we have. A low, a high, and a break of structure, right? This whole move is a break of structure. Once this move runs into an area of support, which you'll spot on maybe a higher time frame, the next phase will be for retail traders to buy off of this support against the overall trend, right? Just like the diagram, just showing it to you on a bigger scale, right? Once the market pulls back, right, it's going to pull back into an area of resistance, right? You see that there's resistance here. The white line means resistance, right? So notice the pattern. This is on the 4 hour, right? So this right here, this whole section would be your BOS. This whole low would be your RTD, right? And then where do you think the banks are entering to take out this RTD? Now remember what I said about a pullback. The market pulls back in a higher high, higher low formation. So look at the diagram. Look, it pulled back in a higher high, higher low formation, leaving money below each one of these peaks. So anytime there was a pullback and a continuation in this pullback, there's money here, here, there's money here, here, and below this wick. So where did you think the banks entered? The banks entered, professionally right on this wick, right? Or maybe they waited for a break of structure and you entered on this wick, right? And as you can see, where does the bank go? The bank comes down to take out all the liquidity that it just created. You see what I'm saying? So you have a low, a high, this break of structure. The next phase will be to trick buyers back into an area of resistance, right? And then the bank does what? Comes down to take out the liquidity below the low, right? Just like the diagram. Low, high, break of structure, create liquidity by tricking buyers, RTD, and that's how the market works. Now, this is me showing it to you on a large scale. So imagine if you're analyzing the higher time frames and you want to get a directional bias based on the long-term swing and the market is sitting over here somewhere. Well, we know that if you looked at this whole diagram, we would get a directional bias of bearish because we know there's liquidity below this low and in this entire pullback, and we know that we're in a downtrend. The only reason to buy if the market was sitting over here somewhere is if we broke above the trend line. All right, so this is showing it to you on a big scale. All right, so let's look at it on a smaller scale. All right. All right, now look at this area over here. All right. All right. Notice the market is making, right, lower lows, lower high, lower low, lower high, lower low, lower high, right? Now, if you look at it, we'll just pick a section. Let's just pick this section here, right? Notice market went into a push phase and we pulled back, right? So when the market pulled back, it came out of this consolidation. So if you notice, after this bearish push phase, what did we break? We broke structure. We broke below a low. You see how there was a low right here. There's a high, right? And then we had a break of structure, right? There was a buyer right here to the wick, and there's the bullish candles. And then once we broke below this wick, that means the buyers got stopped out. So instead of chasing this, right, because this is a higher time frame analysis, we're not going to chase this. We're going to wait for the bank to do what? Run into an area of support and then create liquidity. So as you can see, market runs into an area of support, right? You can see where the market bounced off in the past. And then what happens? Buyers come into the market and they buy against the trend, right? See how the buyers are buying against the trend. Now, what is the next phase? The next phase is to trick buyers back into an area of resistance, right? Now, right here is your BOS, right? Because that's the breakup structure, right? Below this wick or the start of this pullback is your RTD, right? And then where's your entry? Your entry is going to be up here somewhere toward the RTD. Entry could be here. Stop loss can go aggressively here above the high. Your entry is going to be here. And look what the bank does. The bank takes out the order, right? And it'll keep going until it runs into a strong enough area of support. And then the market will pull back. Now, notice we kept dropping, right? Once that's, and this is the reason why you don't want to chase, right? And then what happens? We get another pullback and we get another break of structure. Look at the pattern, same pattern again, right? Broke below the low. So we have a low. You identify the buyers and sellers, right? Low, high, break of structure. Next phase, trick buyers back into an area of resistance. So it's the same thing. Right here will be your RTD. This is just showing to you on the day on the 4 hour, right? The market pulls back in a what? Higher high, higher low formation, leaving money below each one of these wicks. And then where does the bank enter? Up high. And then what does the bank do? Take out all the orders. It's just a vicious cycle. See how I'm saying? So this is what I mean by identifying the phase of the market. And you'll see that it just keeps happening. The lower the time frame, you'll see it intricately on the lower time frames. See how it's happening right here at the beginning of this New York session, right? You have a low, a high. This candle breaks below the wick. There's your break of structure right there, right? We had a buyer, right? And we have sellers, right? So we have buyers and sellers. So look at this candle. It broke below the low. What's the next phase to trick buyers back into resistance, right? You can see the consolidation kind of in between here, right? We got buyers and sellers kind of playing around in here. And then what's below the low? RTD, where would your entry be? Above the RTD to trade toward the money, right? And it's just a vicious cycle, guys. Vicious cycle. Now, this is me showing it to you on a 1 hour, 4 hour time frame. And this is how you can get your directional bias for the day. All right. Now I'm going to show it to you on an even smaller level. And I'm going to show it to you what I mean by just directional bias in itself. All right. Now, notice this is the 1 hour time frame. This is today, New York session. Right. So notice market is kind of in a range, an overall range in this area right here. I mean, we're trending down, but we are fairly sideways. We didn't make any major moves until this move. So this technically is where the break of structure occurred, all of this, not really what was going on inside here, right? We did have a move down, but nothing significant, right? So if I zoom out of this and kind of look at it, you can see that this move was significant, right? So technically, if I look at this, I'll call this my break of structure, right? My mixture of buyers and sellers are going to be here. And this is just me looking at it from an overall standpoint, right? Now, if you notice, we have a mixture of buyers, sellers. We had this breakout. So after the break of structure, right, we know we have already sold. So what is the next phase to continue selling? To create liquidity by doing what? Tricking buyers. Now, we have to see if we're at a strong level of support. So, granted, this was Friday, this was today. We can go to the daily time frame and just look straight across and see, did we hit any levels of support and resistance? We do have some rejection over here, right? You can look to the left, right? We got good, strong rejection right here. So we know that this is a strong level of support, right? So from here, we know what this phase is. This is the phase of the bank doing what? Creating liquidity. So remember what I said, the market makes lower lows, lower highs, lower lows. This is the phase where we're making a lower high. You can draw your little trend line. You know that we are moving to the downside. This is the bank creating liquidity until we break above structure or above that trend significantly, right? So we know obviously there's opportunities to buy unless we break below unless we break any form of a trend. So from here you can go to a lower time frame, 15-minute time frame, right? And look at the New York session. This is the beginning of the New York session. So the bank is creating liquidity. We know that we create liquidity by doing what? Higher high, higher low formation, right? So we know that we can buy until a trend line gets broken, right? So look at the beginning of the New York session right here, right? So right at the beginning of New York session is kind of in this vicinity right here. This is 1400, so I'm pretty sure 1500 is like right here. That's technically 8 o'clock. So that's 15. That's 14:45. So that's really around 8 o'clock right there. All right. So look at what phase the market is in, and honestly, we can actually use this line just to make it even that more understandable. I'll zoom in on it. Right. So right here, if you came to the charts right here, you could pretty much see what phase the market is in just based off of the candles right here. Right. Notice we have a high, a low, and a high. So right here, we know what phase we're in based off of what's going on over here. This is what I mean, right? We have a high, a low. This candle was your break of structure. So we're going to write BOS right here, right? And you'll see that this pretty much happened throughout the day. So after the break of structure, the next phase is to do what? Create liquidity by triggering the seller, right? And this is just me reading the language up into the beginning of the New York session, right? So we know above these wicks is RTP. And then what is the next phase? To trick sellers back into an area of support, filling inefficiency, right? And then right at the beginning of New York session, this candle forms. Now notice if I zoom in on it, and it depends on when you get to the chart, you see how there was an entry off of this support, and the moment you entered, you see how it went up and took the money from above this wick? And then it's just going to keep doing that, all right? So what I mean by that is watch. Now this is your break of structure, right? Or this whole move is your break of structure, and you'll keep drawing it, right? You have a high and a low break of structure. This becomes your RTP. Next phase, trick sellers back into support. You have an entry here, all right? Now, right around 9 o'clock today or 9:30, I'm pretty sure that's what this was because I traded NAS like a dumbass. I should have traded US 30 today. Um, but right around this time, this is 1650, 1615, we started pushing to the upside. All right. So technically, you don't want to enter the market right at the market open. You kind of want to see things kind of play out. Trying to predict that market open move sometimes can be catastrophe. It could easily decide to take out sell side liquidity at market open. So usually, I'll sit on my hands. But as you can see, right at market open, we were already kind of pushing up. And then all of a sudden, what do we get? Another break of structure, right? See that? This is a huge break of structure right here, right? So we can't chase this. This is what I call a push phase. All right, I'm going to go back to the diagram, right? This phase right here, when we break above a high, that is a push phase. If you chase this, you're going into drawdown. So look, we don't chase this because if you did, you'd be in this drawdown. You understand the phases of the market. We had a break of structure, right? That means that buyers took out sellers in order to go higher than this point. We have to trick sellers into selling against the trend. So you draw your little trend line, right? If this doesn't break below any lows, there's no reason to sell. Your RTP is above this high, right? You can pretty much tell there's tons of inefficiency in this candle. So we're going to fill that back to support, right? And then if you look at this, I'll go to the 5-minute time frame, right? What did we say the market does when it pulls back? Look at the candles. It pulls back in a low, high, low, high formation, which means there's money in this move. If I go to the 1-minute time frame, you're going to see that it looks even bigger, right? You see my RTP up here, right? See this whole area is my breaker structure. Look what the market pulls back in a what? A lower low, lower high, lower low, lower high, lower low, lower high formation back into support. So you know that there's money above this candle, that candle, that candle, that candle, all the way to the top, right? So your entry is going to be somewhere down in here, or you can wait for a break of structure to the upside and get in trading toward an order. An example of that would be lower low, lower high, lower low, break of structure here, entry. Break of structure here, entry. And this would be your RTP for your order above this high. And it's crazy because I can draw the same exact pattern on the 1-minute time frame. Look, high, low, break of structure, next phase, trick sellers, filling in balance, RTD, and then you're in the trade with the best risk reward you can get. If you put your stop loss below here, it never gets hit. You're good. You can put it down here. You're still good. And then the market goes up. Don't forget about your overall analysis because when I go back to the 15-minute time frame, we're going all the way back up here. And this is what I mean by understanding the difference between the time frames because you'll get lost. You'll totally forget what you were actually trading long term because once you get to lower time frames, it looks like a totally different world. But as you can see, everything that I showed you in the diagram is factual, right? We pulled back in a lower low, lower high formation, right? For your entry, right? If you want even a more exact entry, you wait for one of these structures to get broken. You wait for RTD to be created. As long as we fail to break this low, you can enter right here and you get into the trade, right? And those are a little bit more advanced, but that's how the market works, guys. And as you can see, it just kept doing it, right? Up this uptrend. Look, all right, look, high, low. This wick was a break of structure. Look at the bearish candle. It pulled back. You had another entry. Above that wick was your RTP. And then look, it takes out the RTP. And then it just keeps doing it. Look,
Yeah, sweetie.
did it again right here, right?
Yeah. What's up, sweetie?
I don't know who's talking on my call, but you about to get kicked out. All right. You see that? RTP entry down here on this candle. And as you can see, what does the market do at this point? It just takes off and takes out the orders. You see that? Right? That's how the market works. And then why is the market doing this? What phase is this? Like, remember what I said, when you're on the 15-minute time frame or you're on a 5-minute time frame, you forget this is not an uptrend, right? I mean, it is, but we're not in an uptrend overall. This is a pullback. We are in a downtrend. So make sure you understand what you're trading, right? Remember, we're in a downtrend, lower low, lower high, lower low, lower high. This is what we're trading, right? We're not trading a full-on, uptrend to the upside overall. We're just trading a pullback that looks like an uptrend on a 15-minute time frame, right? And that's where a lot of people get lost. They don't know what they're trading, all right? So I'm going to clean this up a little bit, right? And I'm going to explain it to you again, right? What I mean by take and create, all right? I'm just going to say it. Watch. The bank takes liquidity, creates liquidity. Just say it to yourself when you're trading. Takes liquidity, creates liquidity. Look, take, create. Where do you want to enter? Or we're taking it. Is when once we want to enter down here in the process of taking the liquidity with the trend. And that's what you need to know about the market first. If they taught this first, then you would understand your trend lines, you would understand your support and resistances, and you would understand how to not trade against the trend because now you have rules. We do not enter the market in a push phase, right? Because the only time the market really works is if you get lucky and you enter in the push phase right here and you catch this. But even then, what happens? The market will break structure, and then the next phase would be for the bank to do what? Create liquidity, filling in balance, and you're stuck in drawdown again. You see what I'm saying? But that's how the market works, guys. Now look at it from an overall standpoint again, all right? Just so you can kind of see what I mean, right? Take liquidity, create liquidity, take liquidity, and then even on a smaller scale, right? We created it, we took it. This whole process on the 4-hour time frame is creating it. So if you understand that we're creating it, then yes, we're in an uptrend and a pullback on a 5-minute time frame for your daily scalp or your intraday trade for the day, right? And this is how you don't get lost and you understand what you're trading, right? Very simple, guys, right? Now, with the system, right? If you add, the system for confirmation, you're going to realize once you get used to using the system, I'm actually going to show it to you on the Slingshot template, not the boss money. Well, I'll show it to you on both, right? Every time the market pulls back to these zones, the system will give you a confirmation in this area right here. Fortunately, once the market starts trending intricately like this, you're not going to get an arrow on a 15-minute or 5-minute time frame. You're going to get it probably most likely on the 1-minute time frame. Right. So if I go to this template right here, you'll see that we do have a strong signal. This is the slingshot template, right? We do have a strong signal letting us know that we're in an uptrend. But if you're looking for signals to signal you to get into the trade here, you're not going to have it on the 5-minute, right? But you may have it on the 1-minute. Why? Because everything looks bigger in those areas, right? So if you actually have to have an arrow for confirmation, sometimes you have to go to the 1-minute, right? And as you can see, you see how there's an arrow here. You can draw your vertical line. Moving average changes color. Purple, MACD flip, oversold, market goes up. And this is going to keep giving you the same type of process. Oversold, MACD flip, where yellow, market goes up. But you see there's an arrow in this area. There's one right here. So the system will confirm an uptrend, but the system is created to show you where the reversal point should be. Start of the reversal point was there, I believe, right? But when you're on the 1 hour time frame, you have a clear signal that the market's going to the upside. So the system is pretty much telling you that we did break out a consolidation, and then we are creating liquidity right now. So buys are valid, just maybe not long term until we break structure and get into this area of which let me draw that line and get into this area of support. Right. So, maybe once we get above this level and start respecting this level, then we'll be bullish. But until then, we're still bearish. We're just in a pullback that was, easily tradable to the upside because of this phase in the market, guys. Right. Right. So hopefully you guys, have a better understanding of that, because that's what is going to separate you from everyone else, is understanding what phase the market is in. Now, the reason why you don't want to enter the trade in a push phase after the breakout structure, which I know some people like to trade breakouts, is simply this. And I'll show you what I mean. Like right here. You see how once price breaks this, sure, you will go into profit a few pips, right? That's 500 points. But if your TP is down here somewhere, because this is the push phase where they take money, you already know that they're going to create money. So you're going to go right into drawdown. A lot of the time, that drawdown is going to be way more significant than the amount of profits you had, because you're always going to get a late entry on a breakout. You're not going to get a good entry, right? Now you see why you want to enter high, so you can trade toward these lows, right? You see how this process works, right? See how there's, oh shit, right? I'm going to zoom in on that so you can see it. Shit, right? You see how there's a break of structure here, right? And then if you entered here, you'd end up way over here. And you're going to enter this late. You're not going to get a perfect entry on a breakout. So you're going to enter late, maybe late on this candle, and you're going to go right into drawdown significantly. But if you understand that this is the phase you shouldn't enter in, and then you should wait for the banks to create liquidity by tricking buyers, then you'll know to enter high, right? Where there's an order block or to some inefficiency to fill. So you can trade toward this low and get in with a better risk to reward. You can enter on this candle, stop loss and go above here, and you're Gucci to take this to the downside. But that's what you have to focus on most, is what phase the market is in and then where to enter the trade. Okay. Right. 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 So from what I just showed you guys, I'm going to open it up for some questions, and then we'll go over the open orders. Let's see. Somebody asked, was an order block? I'll answer that later. All right. All right. All right. So if anybody has a question, you can ask me now. I think you guys are unmuted. Does anybody have a question before we move on? Anyone?
Yeah, can you show the Nas trade that you did this morning?
The Nas trade? Okay, yeah.
Yeah.
Yeah. All right, so, and this was just like US 30. All right, so you go to a higher time frame, right? So you see this is a 4-hour time frame, right? And you see how we have these swings, right? You have that swing, and then this swing, right? So you see how there's a break of structure here, which means we have a what? A low and a high and a break of structure, right? This is your whole break of structure, right? And the market was already doing what? You can look at the days and kind of tell, right? You see how this day is higher and higher? We were in an uptrend. But what phase is this after the break of structure, even though we're trending to the downside? We're pulling back, we're creating liquidity, right? So my direction of bias was bullish because I knew we were creating liquidity, right? So from there, you go to the 1-hour time frame, and you pretty much just do the same exact thing. I'll clean this up because we already know why we're pulling back, right? Right. So my thought process was this: we're pulling back. The market is making what? Higher highs, higher lows, and the market was sitting right here, right? And notice we didn't break above this high yet. So all I did was I read the language leading into the New York session. And what I saw was we had a high, right? We had this high, this low, and this break of structure that had not been taken yet. So this was an RTP, right? This was your BOS. Right? And then we started to, head toward taking this liquidity, right? And then I saw that we were doing what? Making highs, lows, and then we made a high. So I went to the 5-minute time frame, right? And basically what I saw was this. Look, why do you keep moving on me? Right? I saw this. I saw this high, this low, and this high. So the same exact pattern was in there, right? And if you want to get intricate about it, I could just do that, right? Actually, I'm gonna do that because this whole move never broke above this high, right? So better look at it 15-minute time frame just so you don't get lost in the sauce. Usually at market open, we usually get a liquidity grab. So I didn't expect the market to just go to the upside. But what I did see was once we had a break of structure here, we had another RTP right above this wick, right? Right above that wick, we had an RTP. So once the market pulled back, right, it gave me an RTP here, pretty much equal highs, right? You can see the two wicks. But I knew that this one had not been violated yet, and I knew that this hadn't been violated yet, right? So basically what I did is I watched the market open. We did pull back. I saw this start to come back up, and I entered on the push of this candle right here. I entered right here, right? If you go down to the 5-minute time frame, you can kind of see all that volatility just came into the market. Stop loss goes below structure, so I probably had it below here. Honestly, I'm very conservative, right? Entry was, on the push of this candle, and as you can see, the market goes up to take out the original RTP because this is the original one that I was trying to take out, right? Right here. As you can see, it took that one out, and then it took out the one for my entry. Now, technically, this could be considered a late entry for this because we were already well into the move. But because the volatility comes in that market open, you know, higher time frames, you can see it better though. I had a funny feeling the market was going to go up and tag these orders, right? Why do you do that?
And using the system would have confirmed that.
In this area, most likely on a 5-minute time frame. Yeah. And that's another thing too, that's what I'm saying. Like with this system, you're gonna have to realize that if you're focusing on just signals, then you have to wait for the market to get in an area where it's extremely overbought overall, like the boss money template, it's not going to be well. Well, boss money template would have gave you the signal. It was outside the borderlines here, but we were consolidating, so I don't know how valid you would take that trade if we were just doing it based off of an arrow, but it did confirm it right here on the boss money template, right there. You see what I'm saying? It confirmed it right here. But Slingshot template confirmed it on this wick. Actually, no, I'm on a Slingshot template. No. Okay, I am. This is Slingshot template, isn't it? Let me show this is Slingshot template. Yeah, this is it. So, it's going to confirm it it's going to confirm it on this wick. So you're not going to get this type of a signal while price is trending. Do you see what I'm saying? You're not going to get that type of a signal, right? Maybe on the lower time frame, like a 1 minute, but I thought it was on NAS. Yeah. See right here, you'll get that signal. Right here. Yeah. So, if you're relying on the arrows, then you're gonna have to go to those lower time frame if the market is already trending. Or wait for a significant move like this. You see what I'm saying? And then you'll get a significant signal, to trade to the downside. But that boss money template is made for scalping, and if you use Slingshot, then it's deadly because Slingshot is going to give you a valid signal pretty much anywhere on the chart where you're going to get an accurate entry. But yeah, I mean the system did call that trade. It's just how many people took the trade based off of that arrow. It's not the arrow that's giving you the compass to place the trade. It's your analysis, and then the system just helping to confirm. Because if you're relying on the system, you probably wouldn't have caught that trade, right here like I did. The trade was caught based off of knowing this stuff. That's how that trade was caught, right? Hope that helped with the NAS trade. All right. Does anybody else have a question? Anyone?
I have a question.
Yeah.
Is there any way, I'm sorry, I had just now getting on the call. Is there any way that you could show me how to do like a top-down analysis when I'm like trying to get into find a
we're gonna get into that after this part of it. Once I go, I do an open orders analysis now, so I'll go over the open order analysis as well.
Okay.
Yeah. Pretty much what I showed you though is basically a top-down analysis. Keep showing you a directional bias based off of liquidity and understanding why the market's going in this way. I mean, that's a top-down analysis, but the open order analysis is what comes after all this. Because technically, I could say this is top-down analysis, basically me showing you these swings and what these swings mean, so you understand why this is happening. Because remember what I said after the break of structure, right? If you look at the swings, right? The next phase is to create liquidity, right? And you got to realize we trade in session, so the process of the creating of the liquidity has already happened. It started a couple of days ago, right? Because this was Friday,
right?
So between Friday and now, it's valid that yes, we are creating liquidity. You can see it. You see what I'm saying? So that gives you your direction of bias. That's top down enough right there, right? You see what I'm saying? Because we know why we're going this way. Because it's the creation of liquidity, right? This day ended and we already started to pull back. So, that right there gives you directional bias. And then once you get directional bias, it's pretty much, how far is it going to go? Are there orders over here for the bank to collect? Are there equal highs for the bank to collect? And that's where my open orders analysis and all that stuff come into play, which I'll go over. But that right there is top down analysis enough. Just knowing why we're doing this And are we finished doing this? And if we're not, can I get in? Do you see what I'm saying? If that makes sense to you. And then, and like I said, I don't expect you guys to be able to come to the chart and see this the way I see it. It does take time. You may have to do your one-on-ones, or I mean, zoom out and really take a look at it. I mean, look at the market, right? Remember what I said? These patterns work on every time frame. So take a step back and look at the market. This is the 4-hour, right? The same stuff that I'm showing you intricately in this downtrend is happening on the 4-hour time frame. Look, swing, just all of this is a swing. From here to here is still one swing. This is what we're worried about.
Okay.
You see what I'm saying? You can't call
Yeah,
this a swing. It's this whole area is a swing. From here to here is still a swing. And then a drop, right? And then a
then
swing.
another swing.
And then another swing. You can't use this stuff because this is a 4-hour time frame. So these swings, right, are the bank taking liquidity. Then the bank, remember I said it creates liquidity, but then it's going to manipulate until it decides to take out the rest of it. And then once it takes the rest of it, now it's going to take what's left over, right? Which I'm going to explain to you what's left over. All the orders over here, right? There's money here, here, here. The bank's going to take it until it runs into a strong enough area of support. And you'll know what the strong area of support is because it's where you get the biggest bounces. You see how we have this huge bounce? You see how we came right to that area right here? See how we bounced off of it? That's why we stopped. So you have to understand it's the swings. Take liquidity, create liquidity. Take liquidity, run into an area of support. Now we're going to create liquidity. You see what I'm saying? And then we took the liquidity, right? And then most likely ran into some support down here, right? Strong enough area of support where the bank maybe broke, retest, and then, there was a huge move to the upside, like right here, and we moved up. That's the reason why the market decided to stall here. And now we're creating liquidity again. And then on the lower time frames is where we get the opportunity to get into this, whether it be down here, right here during Asian and London, or right here during New York. You see what I'm saying?
Yeah, I got you.
Yeah. So, like I said, that's the part, that should make it easier to analyze the chart because, it doesn't matter what you're trading. It could be GBP, USD, right? It could be this pair, right? And if I go to the daily time frame, right, we could see that. Let me zoom out a little bit because that's where we're trending down. All right, so look at this. This is GBP USD, right? Now look at the market. We're trending we're in a downtrend, right? I think I can go to the weekly on this without it freezing, right? You see how we're trending down, right? So look, low, high, low, high. So we're creating liquidity. Didn't take this liquidity, so we're still creating, and then we came out and took all of it, right? Then we took it all, right? This is on the weekly time frame. Then we took all the liquidity, right? And now what are we doing? We're creating liquidity. So what's below here now? Money. You see how, right? And do you see the pattern on the weekly? High, low, right? Break of structure. Next phase, trick buyers into what? Resistance. And now we're doing what? We're in the process of taking what we just created. The market pulled back in a high low formation, and we're taking out what we just created. And the route it's going to take may not be the it's not going to be a clean route, but it's going to be a route where
it's definitely going to go that way.
Exactly. Or unless, news takes above this trend line. Do you see what I'm saying though? So, you get your directional buy based off of that. So when I go to the daily time frame, I know why we're going in that direction. You see what I'm saying? Like I know why we're in that direction. Right? So now we know this process is to take out the liquidity that we just created. So we know that these moves are going to be breaks of structure, pullbacks, RTD entries until the market hits an area of support that the market wants to bounce off of. So like in this area right here, we're still bearish until we break above one of these levels. And even then, we're still in the process of creating liquidity. We can actually come way back up here and then decide to take out the liquidity below the low and everything that's over here. You see what I'm saying? Because we're still in the process, we're still in that same process of taking liquidity to the downside. You just, you can't see it. See how we pulled back and we hit this level and left all the money below these wicks, right? It's just the route is what route is it going to take? Because see now, you see how this move broke below this low? So now we had a break of structure. So now we have a low, a high, a break of structure that ran into support. So we have to create liquidity in order to go lower than this. You see what I'm saying? Hopefully that helps. That helps. But it's the same process, right? Big swings. This is just another big swing. Once these moves takes out orders, that's how you know that liquidity has been taken and what the next phase is going to be. And then you just, you pretty much do the same thing, on the lower time frame. Like even in this area right here, the market made a low, a high, a low. This is a daily time frame. You could take that all the way down to the 1 hour, right? Look at the daily time frame here, and then look what happened right here, right? Because I actually took a buy today on BBP for just like 20 pips. And look, low, high, break of structure. What phase are we in? The market's making higher highs and higher lows, and we're taking liquidity or creating liquidity, right? So if you look at it, leading into New York session, what were we doing right here? What were we doing right here? This whole process is creating liquidity, right? So we're in an uptrend. Look at the swing. Higher high, higher low. So what's above here? RTP, where are we? We're down here at the low. So to get into this trade, look, so do you see how right here, we're like leading into New York session, we're kind of in this area, right? So look, we already know what we're doing. We know we're creating liquidity, right? We know we have to get up here, look. Low, high, low, and actually not even this low. We'll just use this one, right? That's the closest low. See how we had a break of structure right here? The wicks went above, right? Area of support, RTP. Don't forget about this one, right? Don't forget about this area right here. And then there is your entry. You see? That's 43 pips right there to that high. You see what I'm saying? It's the same process, like to get into the trades. This is your break of structure right here, right? BOS. This is just for the entry, right? Above these wicks are your RTP, right? We got to see a pullback. That's your RTP. And then when the market pulls back, it's going to pull back, the imbalance. And I'm not, an expert on imbalance or order blocks, trust me. But imbalance, we're filling imbalance. You see how there's a wick here and a wick here and a big space in between, and you'll know when there's imbalance. It's a candle that looks out of place. A huge thick candle like this is going to have imbalance in it. So you'll see that the market pulled back. We respected it multiple times. We know there's money above these highs, so your entry is going to be aggressively down here. You're going to wait for us, to see some bullish momentum into the market, or maybe a price action trigger, right? Like a hammer candle. And you get into that trade, right? And now you're in it. Stop loss can go below previous structure, a few pips below previous structure. Now you're in it. You have to weather the storm before the market takes off. But as you can see, if you trust the liquidity that you see and you trust what phase the market it's in, you can clearly see that, and it's just ugly. Like I said, GBP USD is manipulated, but look how ugly the price action is. But when you zoom out on it, right, you clearly see that we broke below these lows. We already started pulling back. We had 1-2 days of pullback, and we know that there's money below here now. If we took money and we have to create it now. You see what I'm saying? See how this went below these wicks? These buyers got stopped out. So in order to go lower than this point, the bank has to create now, right? Has to create money. So if the bank is creating money in an uptrend, which is a pullback, then we can look for buys on lower time frames. That's why there was an opportunity to buy right here because we're still in the process of making what? Higher highs and higher lows. It's just an ugly looking price action. You see what I'm saying? It's just ugly. But as you can see, this is your high, this is your low, RTP, right? And it's weird because you can see it right here. Look. Remember I said how universal the pattern is? Look, high, low, break of structure, next phase, trick sellers in a what? Lower low, lower high formation, back into support, filling imbalance. I can even show you where the imbalance is right here, right? We gap right here, right? And then this is your RTP, your overall RTP, right? There's your break of structure, RTP. Your entry would be down here, if you really were getting the best entry on this one, but we don't trade this session, right? And then look where the market goes. It goes up to take out the RTP, right? And look at the pattern, right? Zoom out, just so it looks just like that pattern. Now look at this, right? Look at this, and then look at the pattern in the diagram. Look, high, I'll even draw it right here. Look. See it? High, low, break of structure, pull back, lower low, lower high formation, right? RTP, entry, boom. Just like this, right? So look. High, low, break of structure, pull back, lower low, lower high formation, RTP, entry, boom. See how that works? That's how the market works, guys. It's all liquidity. You just have to identify the phase the market is in, understand what it's in overall, and then trade that same phase to get into the market. And then, like I said, the system will call these trades. Like I'm pretty sure the system called this one. Let's usually on this one. We'll go to GBP USD because this one's significant. See? System called it right here. See that? Hey, look. You see? High, low, break of structure, next phase, trick sellers, back into support, entry, there's your arrows. RTP, we take out the RTP. That's why I said the system confirms analysis. So if I was entering right here and I saw these arrows right here, I'd have nothing but confidence. You see what I'm saying? This is already telling me the direction, and this is where I already think it's going to go. You see what I'm saying? Just like right here, if I saw, I know this was a break of structure. I know after the break of structure, we create liquidity, and then the market does this and pulls back, and I see these arrows, I know where it's going. It's going to create liquidity like I just said it is. You see what I'm saying? Just like right here. We just broke structure. In order to go higher than this, we're going to create liquidity. See the arrows? They're telling me we're going to create liquidity. See what I'm saying? All right, look at the stochastic. Oversold, MACD flip, we're yellow. The candles are yellow. Now, so this moving average is backwards. I didn't even realize that. It should be yellow and that should be black. I don't know why I had that like that. All right, look, everything's yellow, yellow. This is telling me the market's going to go to the upside. You see what I'm saying? All right, any questions, guys? Anybody else have a question?
What about that beast second arrow there, that beast super arrow? Is that like a second confirmation?
Just a second confirmation. This arrow usually pops up when there's a break of structure. So usually when there's a strong bullish move that closes above a bit of price action, because like I said, it's the breakout candle. Breakout indicator, then that arrow, this arrow will pop up. So technically, I'm pretty sure this arrow popped up after this explosive move because it did break structure. So we know this is a push phase, not to enter in that phase, to wait for liquidity to be created by a pullback, and then you can enter toward the orders. Just like this one, this popped up probably when this candle formed breaking below this low, and then we got a pullback. Just like this, see how this one popped up, but we had a break of structure, right? So that's how that works. Same thing over here. You have your second arrow. Price action broke above a bunch of highs, and then we pulled back. That the break of structure after the arrows pretty much validates the signal. That's another thing too. Like you see how this went down and broke below a low, broke below this, broke below this break of structure. Once you get a break of structure and a pullback, that validates this, right? In an area of supply and demand, though, that's going to validate that signal. So keep that in mind if you're entering off of an aggressive signal. If you're entering aggressively off of the signal, because you're not gonna always get a pullback. Like this one, break structure. Technically, these are not valid until price comes back to this order block, really. Right? It's not really valid until it comes back because we never got a pullback back into structure in this area. We did get a pullback here, but we never really got a strong pullback. So technically not valid unless you traded this intraday on a lower time frame. But higher time frame analysis, you can see that this inefficiency got left behind and never got tagged. So it got tagged later on, a day later. But that just depends on if you're intraday or not. But you
What
never
about
want to
the
trade it.
US on the US 500? Is that doesn't that kind of move like the US 30
The US 500.
or the S&P 500?
Yes, same. It moves pretty much the same. Yeah.
Because and if you have a smaller balance in it,
Yeah, it's the same thing.
okay.
It's just like this worked the same exact way. You had a break of structure here. The market was creating liquidity, right? So you can clearly see it depends on when you get into the trade. Like we had a break of structure, can't chase this, right? Can't chase this. So next phase, trick sellers back to support, right? This is kind of when you want to draw a trend line, right? Which I see this is part of the reason why I don't like fucking trend lines, but right here, unless you get a clean break and retest, which this is the reason why this would make you want to sell right here. This one would be a loss if you try to trade the break and retest of this. But if you look at the price action and you understand, the levels, and this is what I mean by the levels, right? All of this is your break of structure. All of this, right? This is what we broke. This consolidation is what this price action broke out of. So you have to remember that, like, unless this gets violated, you see how there's support right here? Unless we break below this support level, we're not bearish. And as you can see, we came right back to that support level, leaving the orders above here. We had a liquidity grab below here, and then we hit this support level again. So technically, this is your BOS, this is your RTD, aggressive entry right here, or you wait for the same exact thing to get into the trade. As you can see, we had a push phase. We pulled back. Here was an entry. We had another break of structure. We pulled back. We had an entry, and the market goes to the upside. This is the reason why I don't like trend lines, because this is the type of thing where you'd want to sell right here. But I'm pretty sure the daily candle was extremely bullish. The weekly candle was extremely bullish. There was really no reason to sell those candles, because those candles are not going to go bullish to bearish. It wasn't going to happen today. But yeah, I mean, S&P, it's going to be the same scenario. Just some days it's going to be harder to read than others. Today, I would say was a little harder to read than others. Honestly, US 30 was probably the easier one to trade. And like a dummy, I decided to trade NAS today, and was still a nice trade, but nowhere near as good as US 30 today. Because NAS did not move nearly as much as US 30 did today, but I wanted to be done. Once I caught that trade, I was like, I don't want to sit here all day. So I left, went to the gym, came back, and US 30 took off. But that's just the way it goes. But yeah, I mean, S&P, moves the same. It's just a little more manipulated today than others. All right. But yeah.
Okay, thank you.
All right. Does anybody else have a question? Anyone else before we move on? We're at 9:30 now. Anyone? Somebody in the group asked me what an order block was, and it's usually the last up candle before a down move or the last down candle before an up move. If I'm saying that right. So like right here. You see how we're in a downtrend, right? This is a good example right here. See how we're in a downtrend right in this area? And then we get a break of structure. This is the last up candle before the break of structure. This is the last up candle, this candle right here. Let me zoom in on it. All right. Come on, computer. Right? This is the last up candle before the breakout. This one. Right? So this is your order block. Market usually pulls back to that order block, usually around the 50% of that candle. And as you can see, right at that wick is your entry. And then down here would be your RTD. Market's going to come down, manipulate, and end up taking out this order. Right. And you'll see that it just keeps happening, right? Like even right here, right? This is the last up candle, right? Last bullish up candle, right? It closed bullish before price broke below this low. So it broke out and then it came right back up to the 50% of that candle right here. This is your RTD entry. Boom. All right. And then you can see it did it right here again. See this right here? Last up candle before the breakout. Mark comes right back up, 50% of that candle, and then it takes off. So that's what an order block is. And then, if you do it the opposite way, all right, this is the last down candle before price broke above this high. You can put this at this is 3 candles right here, so I'm pretty sure like all this is an order block on a higher time frame. But notice right at this wick is about 50% of this candle and that candle. Do you see how the market broke structure, right? Broke above this high and then pulled back into the range of this candle and that candle. So these 2 candles are your order block. It's just because we're on the 15-minute time frame. But that's 1 candle on a higher time frame. And once it tags that order block, market takes off, right? And then you can see it happening right here, right? You see how we have a breakout, right? And then this was the last candle before the breakout. But notice there's consecutive candles, right? So it's the 50% of all of these candles. So if I draw a line from the middle of there to there, you see how we tag that area right here? You can even call this an order block as well because we tagged that one. But this whole 50% of this pullback is your order block, all right? Here's another example of it right here. Last down candle. We break above this candle, we come right back to the 50% of that candle, right here. You can see it wicking the candle, takes off. Not an expert on order blocks. I always seem to pick the wrong one. So I always look for like an entry trigger, like an engulfing candle or another break of structure before I enter. So yeah, that's what the order block is. Whoever asked about that in the chat. Are they easy to spot? They're easiest to spot when you're back testing. When you're doing it live, to me, it's better to just wait for a break of structures, in the direction of your bias versus just trying to trade that order block because you pick the wrong one, you're going into drawdown. So, all right. So I'm going to end those questions here. We're going to talk a little about open orders, and I'll explain the open orders, I guess today based off of US 30. Could do one off of NAS as well, but I think to explain it off of US 30 would be a little cleaner today. But with the open order analysis, guys, I use it to get a directional bias. Now, does not mean your bias is going to be right, because it depends on what your rules are. I have this thing where I do not like to trade against the trend, even though I did kind of with NAS today, but I typically, try to trade against the higher time frame trend. So even though the market moved, extremely high today, I probably would have let this one go, but I'll show you where the orders were based off of, a higher time frame analysis so you can get an idea of why the market would go up and why, you wouldn't sell, where you might have thought about selling if it was live. So what an open order is basically, what liquidity has been taken and what liquidity has not been taken. That's what an open order is. So if I start on the daily time frame, right, and I look at where price is, if the market moves down and there's like, just the lowest point, and I draw a line with my crosshair all the way across, I can pretty much tell everything that's above this line is a closed order, which means, anywhere there's a peak inside that area is a closed order. So I can draw a line from here to here, right? And I know that these are closed orders. I'm not worried about these orders, which means the only open orders are below this wick, right? And then below all of this price action here, right? Now, next what I'm going to do is I'm going to decide on what phase the market is in. And you can clearly see that we had a break of structure here. So we're in a push phase. So why would I even care about these orders? I'm not worried about these orders, right? So if I go to the 4-hour, 1-hour time frame, right? Now what I can do is I can start looking for the open orders that, make sense to me, right? And the reason why is because if we're pulling back, then depending on where we're pulling back from, there's going to be open and closed orders. And I'm going to be trading with the trend based off of what phase the market is in. So honestly, let's go down to the 15-minute time frame because this just makes it cleaner to see. But if the New York session starts here, and it's all based off what session you trade. Like I trade the New York session. So if the New York session is starting here or whenever you come to your chart, right, I can see what orders are open and what orders are closed based on where the market is. So if the market was like right here or right here, whatever candle I see, I could already just draw a line from that candle all the way across, and whatever candle that this price action went above, I know is a closed order. So we didn't go above that wick, but we went above that candle, right? That means everything over here is an open order, right? All of this is an open. I can represent it by using some arrows, right? But each candle, all of it is an open order, right? And if I want to, just, map it all out, I can just take a green line and go, these are all open orders. This is my high, right? Previous high. And I know that on top of each one of these, there's liquidity. This whole area is an open order, right? Now, I do know that there's open orders below this price action, right? Below it, right? This is all open orders, right? But are we going in that direction? Are we going down? Are we going up? We're in an uptrend. So what orders do you think I'm more worried about? I'm only worried about the orders that are in the direction of the uptrend, right? Because the only way for me to want to trade towards the orders below here is I need to see a break of structure. And as you can see, we didn't get any breaks of structure, right? To get a break of structure, I have to see price do what? Really break below one of these lows significantly, pull back, and respect an area of resistance. That's the only way to even worry about these orders below here. And what were we doing this morning? What was the daily candle? What was the weekly candle? It was bullish. So as you can see, based off of where I want to trade, all I'm going to be looking for is what phase the market is in and how can I get into the trading towards all the open orders that make sense. The only ones that really make sense at the time are the ones to the left of price in the uptrend. So like I said, I'm going to still look for my pattern, right? And I'm going to keep a bullish bias and I'm going to trade towards the orders that make sense. I already know that there's no reason for me to trade to the downside because I need to get a break of structure or a break of this trend. And it needs to be significant. It cannot be just like a little candle or two. It's got to be significant and it needs to make sense, right? So here's my open order for my entry above this wick. And I'm going to take the trade and I'm going to hope that we take out this order and the orders that I have marked to the left. And as you can see, each one of the orders, right, get closed, right? And honestly, these are equal highs. This is your area of resistance. Just look, they all get closed. See what I'm saying? This one gets closed and all the ones that I had to the left get closed. That's what I mean by using the open orders to get a directional bias, and then you have to use logic. What was logical? Trading towards these open orders or the ones with the trend? Obviously, the ones with the trend, right? And as you can see, as the trend continues, it's going to take and create more orders to take out to fund the move to take out the money that they want to take off to take out in the past. And that's what I mean by open orders, guys. And it's it's basically just drawing a line based on where price is, and then seeing what liquidity has not been taken, and then deciding on what the trend is, and should I trade towards these orders or these orders? What makes sense? This is obvious. It makes sense to stay bullish, right? Unless we get a significant break of structure, right? You might do the same exact thing with GBP USD today as well. So we can look at this as well. All right, so I could just look at what was going on over here. So from here to here, overall, everything inside this area is a closed order, right? Now, everything below this line is an open order. And this is how you get an easy directional bias. Do you see how quick this will be? Watch. All right. Right. So we know that these are open orders. These are open orders. But leading into the New York session, what is the market doing? I can just draw a trend line and say, okay, well, I'm not worried about these orders. Why am I not worried about these orders? We're not trending down. So what orders am I worried about? Well, I'm worried about this order, right? This one, the one that's above this candle, right? Because if I'm down here, the only way to get to this is I need to break the trend, right? So which ones do you want to trade towards? The ones that are going with the trend, and they're on this side of the price action. They're on this side, right? So leading into New York session, right? Right? Remember we said market pulls back in low high formation. We know that the open orders are going to be all inside this price action right here, on top of each one of these candles. And until we break this trend, there's no reason to trade towards these. And where are the orders that haven't been closed yet? So like if I draw a line from here to here, do you see how this wick went above that wick, but it didn't go above this one? So this whole area is an open order. Open order. All that's open orders. So, at the time, this is the previous high at the time. So I'm trying to at least get to this high or possibly close this order. As you can see, if I draw a line here and here, all those orders get closed from here to here, right? And actually, if I did it from down here, based on this, not my session, but you see how it goes up and it closes that order, goes up, closes the orders over here, and it's above each one of these candles, guys. There's an order above each one of them. It's not just that high. And as you can see, the market takes out the open orders. So like I said, it's easier to get a directional bias when you know the trend and you know where the orders are to trade toward and what makes sense. Did it make sense to trade towards these? And we already know that these are closed orders. Like if I draw a line from here to here, everything above this red line is a closed order, which means this is even an open order, right? Below this wick. But we're not going in that direction. So why would I worry about these? Which one should I worry about? These. See how that makes sense, guys? All right. I mean, if anything, that should be an aha moment. I don't know what this guy's saying. Overall, wouldn't you say that it's on a downtrend though when you look at the 4-hour time frame? If you're talking about GBP USD, then yes. Yes. If that's what he's talking about. Yeah. But that's my thought process, with the open orders analysis. And it's basically just drawing a line, seeing what's closed, what's open, and then deciding, then looking at where price is going and what makes sense. Does that make sense to trade towards these orders, guys? It only makes sense to trade towards these because we're trending up. Very simple. Right. And probably the same thing for NAS too. Even though NAS was ugly price actually, like I don't even know why I traded NAS today the way it looked. But You can look at NAS. Well, this one just makes sense on the daily, that's why, but all right, so look. All right, all of these are closed orders, right? So we know the money's here below the wick, right? Go to the 4-hour time frame, right? In the higher time frames, you can really see it. Now, what is the market doing? It's making highs, lows, and it's in the process of making highs. So like if the market was right here, you could see what orders were already closed, right? I can draw a line from here to here. Open order, look, watch this. Really, you just need the higher time frame. Look, open order above this wick, open order, right? So if that's no, these are open orders, and I just draw this line, right? So that was a given, right? I go to the 1 hour, right? Where's the money? The money's above this wick and that wick. Very simple. And where's the money that is left over, in the opposite direction that price isn't going? Here, which makes more sense at the time. At the time, it made more sense to trade towards these open orders. Unfortunately, the market just didn't move a lot, but it did move enough to catch, 1,400 points towards those orders, And like I said, just drawing that line and understanding what you're looking at will tell you where the market should go based on where the open orders are. Right? So I hope that makes sense, to people. If you don't understand this, I'm doing a lot of these on the one-on-ones, like we're specifically talking about this, and then eventually you'll get it. But this makes sense after you do this, because if you don't do this, then it doesn't make much sense. You have to understand the phase the market is in to get a directional bias, because you want to know why the market is pulling back. You see what I'm saying? You want to know why. Right. Hope that helps. Does anybody got questions about the open orders, or they want to see it on anything else? Anyone?
Yeah, how much is the one-on-one sessions?
They're 85 for an hour. I redid it, the whole one-on-one thing. But right now, since I'm still running that promotion, I'm gonna keep it at 85 an hour. But as of probably next week, it's gonna be 85 an hour. It's gonna be 85 minimum of 2 for an hour and a half, or $100 for an hour and a half. Because I've noticed that I keep doing them and it goes well over an hour, and I'm doing it way longer for 85 for an hour. So it's always an hour and a half or longer when I do the one-on-ones. So to make it more, fair on me and the person, it's probably better to just get 2 at 85 for an hour and a half versus just an hour when it always goes over an hour. But I'm going to keep it at 85 whilst at this promotion, all right, for the hour. But if you get a package that has them, that's the affordable way to go. So if you get a package that has 2 free ones or 3 free ones, that's the way to go. So I don't know what package you got, but you may have some free ones. If you got a package that actually has added one-on-one sessions. But that's that. All right. Anybody else have a question, guys? Does anybody need me to go over the open orders again? I can pick something else, that we didn't trade so you can see it. And don't nobody say gold, because I don't freaking like gold. But
Can you do it on oil?
oil?
I was gonna say gold.
Nah, fuck, I ain't doing gold. Not today.
Okay.
Gold ain't even moving right. Gold moving up. I mean, I'll do gold. I honestly, I just don't like gold. Gold is just stupid. I don't know what is it about gold.
When you finish,
I don't even
gold,
see
can you
oil
do
over here.
silver, please?
Where is oil? Does this move during New York? I don't know how this moves. I don't ever just trade oil, so I don't know how this really moves. But All right, well, I can see we're trending down. So, all right, so this is your highest peak right here, right? So you draw a line right here. You can pretty much see that from here to here, everything above this line is an open order, right? So we know that's an open order. Everything above line's open order, but which way are we going? This way. All right, so let's go to 4-hour time frame, right? All right, so leading into today, where are your closed orders, where are your open orders? You had this. That's a closed order. So this is an open order right here. Right, that's an open order. Right, this went up to here on Friday. We went above these wicks. These are closed. Everything above here is open, which means where's the open orders at? Right here, below that wick. And keep in mind, this is Friday, right? Open orders, right? So leading into the New York session, we are right here, right? So let's go to 1 hour, right? And then what phase is the market in at the beginning of New York session, all right? Lower low, lower high, low, high, low. You have a low, a high, break of structure. This is your RTD right here, which I'm just going to put an arrow for an order. And what direction are we going in? Oh, I didn't mean to use that. Okay, and we're going in this direction. So which orders does it make sense to trade towards? Does it make sense to trade towards the ones that are above this line way up here, or the ones down here? The ones down here make sense to me. So there's your entry right there. See how it takes out all the green arrows got taken out. And then you get, like I said, what makes sense? Where are we going? What makes sense when you do this? Does it make sense to trade to the orders over here, or does it make sense to trade to the orders right here? You see what I'm saying? And when I draw these lines, you know everything inside are closed, right? Everything on this side are open, and we're trading to the downside, right? And the only way to trade up would be to break above this high and then start tagging these orders, because these are open orders over here, but we're not going in this direction. We're going to the downside. That's why I say if you use the open orders analysis, your direction of bias gets stronger because now you can use logic, what's logical to trade. Like I said, because we already said from here to here, inside are closed. So, these are open orders, right? That's an open order, and everything above, open, 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 right? Any candle or any wick is an open order above this line. So what makes sense? Where are we going? Look at it. Which way are we going? Are we going up or down? The market's making lower lows and lower highs. We're going down. There's your orders. The orders get taken.
So essentially, like the wicks are the liquidities, right?
Yeah, the wicks are the liquidities. Yeah. But like I said, when you do this, don't forget your overall analysis and structure, because, like I said, it has to make sense. You remember when I started on the daily, right? So, I mean, don't forget what you're looking at and why the market is, over here, right? Because remember what I said about your swings. You know what I'm saying? So this move did break structures. It broke below lows, and, overall, this looks like one big swing. You see what I'm saying? So the market is doing what? Making lower lows and lower highs. I don't really look at oil, so I couldn't tell you where oil is, but yeah. See how it's like a huge swing, right? So this is lower low, lower highs, but this is still a downtrend. We're still trending down, right? So, you have to understand what you're looking at overall too, so you can get that direction. You know, and then like I said, for a quick scout though, like, you know, it's pretty much a given on, you know, when you're going day to day, you know, you can pretty much see, you know, what's next based off of each day, you know. But that's oil. That's how I would have traded oil today, you know. Yeah, that's it. All right. And gold, which this is why I don't like gold, because I looked at gold this morning and I feel like gold should be bullish, but all right, so these are closed. You go to the 4 hour. All right, we're bullish. All right, so this is a breaker structure. Next phase is to trick sellers. And then if I go to 15-minute time frame, which probably too far, but yeah. So these are all open orders, right? That's an open order. This is an open order. This is all happening during London, right? Open order. So leading into New York session, God, gold didn't really move that tough today, but all right, and also now actually you can see this pattern here too. So you have a high, low, breaker structure, next phase, back, tricking sellers back into support, filling imbalance. All right, so right in this area right here is where, you know, you have to make a decision on, you know, where do you think price is going to go. Now I'm looking at orders to the upside because, I mean, look, we're trending to the upside. So I'm looking at wherever there's an order left over leading into New York session. So right here is the beginning of New York session. So 5-minute time frame. All right, so look, all my open orders are right here. I'm not worried about any orders down here. We are trending up until we get a breaker structure. So, all right, so look, lower low, lower high, lower low, lower high, fail to break the low, breaker structure right there. Right, so look, low, high, breaker structure, next phase, trick sellers, opportunity to enter right here, right? So this is before New York. So look at it again. Another breaker structure, low, high, trick sellers back to support. Now we're into New York. So now we have another order here. I got all these open orders to the upside. So, you know, I just gotta get a couple of them filled, right? So I want this one filled, that one filled, this one filled, right? And these are equal highs right here. Here's your entry right here. Boom, 81 pips, and I think they all get filled. Yep, this one gets filled. That would have been gold today. And then, you know, I probably would have been targeting these highs, and then gold would have pissed me off and did this stupid shit. So why I don't like gold. Because my stop loss would have been right here, and I would have got stopped out, and my runner wouldn't have won. But that would have been New York today for me if I was here at the beginning of New York session. Right, so that's that. But do you, what I want y'all to see about the open orders is the logic behind it. Do you see how we're trending up, which means I'm not worried about orders below the trend. I'm only worried about orders above the trend, right? If the trend doesn't get broken and the market does move to the downside, it's just a liquidity grab. It's going to probably most likely come back and collect these orders because we're trending to the upside, right? And that's what, you know, what when I started doing the open order analysis, what made things a little clearer is because now I have a logical reason to trade in that direction, not just because I'm guessing. I feel, you know, do you see what I'm saying? The hardest part is, you know, when you see it going this way, not panicking, going, oh crap, it's selling, when really these are liquidity grabs. Your orders are with the trend. Those are the orders you've set your mindset to trade toward. So just because it's going that way, you can't start thinking about orders that are below here when we haven't even broke structure yet and made anything significant to even think about trading orders below lows. You see what I'm saying? So, that concept, I'm not sure if y'all are grasping that, but I think the more you back test it, you'll see what I mean. It's just, when it's live, you have to stick to that. Sometimes I'm like, that's an order block. I'm hitting it. And then I hit it, it goes this way and then goes that way. You know what I mean? That's why I'm so against order block trading right now. I'm like, dude, I don't even know what order block to go by. But I do know when I get a break of structure and a pullback that it's valid for me to trade towards those orders. Right? Because US 30 would have did that to you today a bunch of times. You could have thought that was the order block. Okay, we're selling. You would have sold here and you would have lost. And then you would have been like, oh, this is the order block. You would have sold there and then you would have lost. I'm so sick of order block trading. It's that screw that. Wait for confirmations and wait for your breaks of structure in between price, and then get into your trades with a little bit more confluence, because you pick the wrong order block, you screwed. And the way this was set up, it just, unless you looked on the weekly or the daily to really get an idea of where price was going. And then once I honestly saw this, I saw it on my phone. I saw the equal highs. I was like, we're nowhere going up here. But I decided to trade NAS this morning, so I didn't get any of this today. None of it. All right. Dude, I'm not doing. Nobody trades silver, man. Why are you asking about silver? Who trades that? Silver. All right, this will be the last one, then I'm not doing any more of these. Who the heck trades silver? And silver did move though, didn't it? What's the 4 hour? All right, so this is, what is silver doing? Let's see. All right, well. All right, so this is the daily time frame. All right. There's your open order, right? And what are we doing? We're trending up, and then what is today? Today is Monday, so this is our day. So we obviously are not thinking about anything below this line. So let's go to the 1 hour time frame. All right. And then look at where New York's open. New York opened right around here. So let's say you came to the chart and we were right. Say you came to the chart and the market was, all right, say you saw this candle right here. That just makes more sense. All right. From there to there, everything below here is a close order. So these are open. 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 I could put the down one, but that's okay. Open, right? Always at the very top as far as I'm concerned. Open, right? And then what are we doing? We're going up. All right, so go to 15-minute time frame. All right. Now look at the pattern. All right. What phase are we in leading into New York session? Well, we're in a push phase. What's the next phase? Trick sellers. All right. So where are the open orders at? Above the red line. What's logical to trade toward the open orders below this line or the ones above it? Well, we're trending to the upside. Well, there's your entry right there. Boom. What does this do? Takes out all the open orders. You see? See what I mean by logic? What was more logical in the situation? To trade to the open orders that are below here, and here, and here, and here, or to trade to the ones that were going with the trend? These open orders. And then see the pattern, high, low, break of structure, trick sellers, RTP, entry towards the open orders. Right? And like I said, another thing too, guys, this does not work unless you are on time for your session. right? You have to be there at the beginning of your session or earlier, you know. You have to be there earlier, maybe an hour before the session, you know, to really get some data, you know, flowing before you enter the trade. You know what I'm saying? Before you think about entering, get there early, you know. But do you see what I mean by open orders? Like which ones would you pick? You know, and when price action goes above an area of price action, everything below it is closed. You know, they are been stopped out. Who hasn't been stopped out yet? The price action above going with the trend, right? And if the market does sweep to the downside, it's a liquidity grab, which means unless there's a significant trend break and retest of a specific or a major area of resistance, we're not going down. We're gonna go up to take out what's left over, right? So I guess that's silver, right? That was that today. Like I don't know, this would have been hard to trade. That was kind of newsy-ish, but you know, market went up. Right. All right. So hope that helped whoever asked about silver. Yeah, that was silver. Yeah. All right. Anybody have any questions? Anybody? Is any of this making sense to you guys? Or is it 10:05? Yes, whoever, if anybody's still left on the call. Yes.
Yes.
Right. And like I said too, system does call these trades. We go to boss money. All right. So like I said, you know, we're trending up. So, you know, your price action is going to be on 1 minute time frame. It's not going to be on uh, these higher time frames, just because simple fact that might be on a 5 minute though. Do we even have an arrow on the 5 minute? Not on this one. But you can clearly see that we got tons of arrows pointing in that direction of our buys off the 200 moving average and below price. So I mean, it's obvious that we're going to the upside, right? Because we're not worried about the white arrows because we're above the moving average. If we were below the moving average, then the white arrows we worry about. We only worry about the black arrows if we're above the 200. And as you can see, we're above 200 on this one. So, you know, system did call this trade. If you use Slingshot, I'm pretty sure Slingshot called this trade as well in that same area. Yep, Slingshot called it actually better right there. See what I'm saying? So, you know, direction was perfect on that one. And then, like I said, if you needed a signal here, 1 minute time frame. See how there's an arrow? System is calling the trade. Boom. So,
I can't hear you, Jared. Okay, I can hear you now.
yeah, you got it. All right.
Phil,
Right,
can you
so-
repeat? You had cut out. Can you repeat what you just said?
I cut out. Oh, I was saying that the system did call the trade on gold. Whoever was asking me about gold, in this area right here, Slingshot called the trade too. So this is Slingshot. Entry could be here. We go to 5 minute time frame. System called it here. If you need to see an entry, a signal here, it called it there on the 1 minute time frame. Right here. I have an arrow, 1 minute time frame called gold. I mean, not gold, silver as well. So, like I said, you know, a lot of people are, you know, they're watching me explain this, and I think I think a lot of new people are thinking that the system is the strategy. The trading system is not the strategy. The strategy is what I teach you about liquidity and those patterns. All the templates do is verify analysis. That's it. All it does is verify your analysis. It's not going to just, you know, when you see some arrows, you place a trade. That's not how it works. You have to understand how to read the price action and draw up this pattern and you know, write down you know, your breaks of structure, your RTPs, or however way you want to identify liquidity. That way, when you go to place these trades, for added confirmation, you can use the system. That's it. For added confirmation. All right. that's it. I think why is GBP dropping? All right, does anybody else have a question? Anybody? Before we hop off here? Anybody? Anybody lost? No?
I got it, Jared.
All right, you guys.
The more I watch you do this, the more I understand, especially with the open order. I
Yeah.
definitely want to get a better understanding of that for sure.
The open order analysis, honestly, is probably the easiest analysis because or it could be hard because I know what it's like when you've been taught to like come to the chart and then do this.
Yeah.
Right. And then do this. And then you go down to the 15-minute time frame, you don't even see the lines you drew. You're like, oh, I don't even see those lines.
Yeah.
I remember that. I should do the same thing. To be like, man, he told me to draw a trend line, and then he told me to do this, and then when I get to the 15-minute time frame, I don't even see my lines. That's all I remember doing. I'm like, what the fuck? And then I watched some dude, make $1 million on YouTube. I'm like, are you kidding me right now?
Right.
That's not how the market works. The whole
Right.
market is baked. Is the whole market? I'm telling you guys, is based off the bank taking and creating liquidity. Taking, and what is it doing? Creating liquidity. That's it. Pick a phase and trade towards it. If you trade the phase in an uptrend where it's creating liquidity, you're trading against the trend. If you pick the phase where you're trading with the liquid to take the liquidity, then you're trading with the trend. Plain and simple. That's the first thing you should learn about the charts. To read the language. It's a language. And the language stems from the higher time frame to get an overall direction. And some pairs are just more manipulated than others. But if you look at this is a break of structure, right? And the market started making higher highs and higher lows. So it's obvious that we are doing what? Creating liquidity. Plain and simple. So what do you should be looking for on lower time frames? Buys. Do you see what I'm saying? Do you see? Like we took money, we're creating money. Now, if you have to place a trade today, then you place a trade in the process of the bank creating money, right?
Yeah.
And if you're a swing trader, then you wait for the bank to finish creating money,
Trading,
and then you trade toward what they just created. So which one are you? Are you a swing trader? If not, then don't worry about it. Wait till the bank finish creating the money on the 4-hour, and then you trade toward the liquidity, just like it happened over here somewhere. I don't know where. I don't see it over here, but but you get my drift. You get my drift, right?
I do.
Yeah, like you get my drift. Like at some point, it's going to go higher, probably back into this or above it, or up here somewhere, right? And then it'll decide to either come back and take what it created, or it can decide to go back up. It's just you wait for your trigger. But in the meantime, there's money below all of this because nothing's broken here. So there's money below. It could go up, it could go down in a lower high formation, and then it could go up from here, and it's still a high, a low, and a high. This is not your high.
Got it.
You see what I'm saying? That's not a high. This can't be a high until we get a break. So it's not a high until we get a break structure. So, that's what I'm saying. It's all manipulated. All this move did was take out liquidity above these highs. We didn't take anything above this one. So it's not a high. You see what I'm saying? All this did was just close the orders in between here and leave an order above here and above here for this to go up and take. You see what I'm saying? Yeah. Because if I can do this, then we're still bullish.
Right.
Yeah. So, but yeah, I mean, that's the gist of it. And like I said, like when you look at GBP, like we're in an area right now where it's not fun to trade it right now. Like don't trade in this. It's not fun. Until we break out of this, then it'll start to get fun for GBP USD. But as you can see, I mean, we should break out of it at some point, unless we decide to drop to this zone. But I feel like we should create some money after taking the money from all these buyers. I feel like we should start creating a little bit.
Uh-huh.
You know?
Okay.
Yeah.
Okay.
But that's it, guys. I don't know if there's anything else or any other way I can explain this. But the open orders technique, the best thing I could do is to, you know, mark it up, send me a picture of it. I can look at it and, you know, tell you if you're on the right track. But, you know, it's pretty simple. It's literally the highest point compared to where you're at price. That's it. Look for the highest point. And then anything below the highest point or the lowest point is a closed order. And then decide on what's the trend. You see what I'm saying? So like if you came to New York session, price was down here, this is your highest order. I mean, highest price action, right? That's your highest order right here. Because we're, you know, this is price was below this. So, you know, you should already know that everything above it is an open order, right? And then you just look at the closed orders compared to where price is. You know, so like if this was the candle that you came to at the time of the New York session, then everything below this is a closed order. Everything above it is an open order, and then you make a designated guess or a logical guess on what orders is it going to take. And if it takes the ones below it first, that's fine. You don't trade against the trend. So these, right? You're not going to trade against this. Like this, you're not going to trade that. So you're not worried about those orders. You're worried about the ones above. Do you see what I'm saying?
Mm-hmm.
And I don't care how far it comes down. And if you look at it on the 5 minute, this looks like a big move you're missing, and you're gonna want to chase it. And then you're gonna get in, and it's gonna go take out the open orders to the upside. So, you know, and that's why I say you look at the higher time frames. We know where the orders are, you know, trade toward those orders until you get something that says trade towards the ones below it. And it's gotta be significant.
Right.
You know, it's got to be a significant move, like something like this, where this comes down that low, break structure, and then, you know, we get a pullback that respects this area. Then yeah, now we start trading towards these orders. But as far as I'm concerned, this was still a pullback until this moved, you know, significantly. You need something significant. Like, see this? This is significant.
Right.
Yeah, on this side, like this is significant. So now we can start trading towards these orders. But before, we're still trading towards the orders above because we're in an uptrend until we get something significant.
You broke all right. Got it. Okay.
Yeah. Damn, GDP is dropping. Not even London yet. All right. But yeah, that's it, guys. Hope you guys got some value out of this. You know, I want you guys to be able to look at the naked chart and understand the price action. That way, when you do look at the chart for the system, you know, you're not guessing. You're just further confirming what you know about the market. And that's it, guys. All right. Hope you guys got some value out of this, and we're going to end it here. Have a good one.
Thank you, Jared. Take care.
You're welcome. You're welcome.